Welcome to Informed Investor. Today, we honor Dr. Manmohan Singh, a visionary leader and the architect of India's economic transformation. At 92 years, his remarkable journey came to an end, but his legacy lives on. Let's just take a moment and speak about the profound impact he had on the Indian economy. In 1991, when Dr. Manmohan Singh became the finance minister under PM Narasimha Rao's term, India was in a serious economic crisis. Foreign reserves were almost gone. Inflation was high and the government was running out of money. Manmohan Singh's reforms were centered around liberalization, privatization and globalization, which fundamentally changed the Indian economy. Some of the key reforms were industrial policy reforms, abolishing the license Raj. On July 24, 1991, Dr. Manmohan Singh's new industrial policy ended the license Raj, freeing 80% of industries from the government control. It reduced public sector exclusivity and boosted private enterprise, foreign investment and job creation. Then comes the devaluation of the rupee and trade liberalization. In July 1991, India pledged gold to raise $400 million, easing the crisis. Dr. Manmohan Singh devalued the rupee to boost exports, lowered import tariffs and opened up trade, integrating India into the global economy. Then comes the banking and financial sector reforms. Under Dr. Manmohan Singh's term, banking reforms reduced the SLR from 38.5% to 25% and the cash reserve ratio from 25% to 10%, enabling more lending to fuel economic growth. Licensing rules were eased and interest rates deregulated, creating a competitive and efficient financial system. Dr. Manmohan Singh's reforms saved India from collapse and paved the way for lasting growth. They attracted foreign investment, boosted exports, created jobs and lifted millions from poverty, transforming India into a market-driven and one of the fastest growing economies. But Manmohan Ji's contributions went beyond his tenure as the finance minister. He introduced the Mahatma Gandhi National Rural Employment Guarantee Act, a scheme that guaranteed 100 days of wage employment annually to rural households. He also introduced the right to information, empowering citizens with access to government's information and right to education, ensuring education as a fundamental right for children aged 6 to 14. Now, talking about economic growth, under his leadership, India experienced robust economic growth with GDP growth rates averaging around 8% annually. Manmohan Singh was not only a politician but a respected economist holding key roles at the RBI, Planning Commission and International Monetary Fund before entering politics. His expertise earned global admiration for integrating India into the world economy. As India mourns his loss, Dr. Manmohan Singh is fondly remembered as the architect of modern India's economic transformation, with his policies continuing to shape the nation's future. Now back to our DI team. Today marks an exciting day in the Indian stock market, with several initial public offerings making their debut. Investors have been eagerly anticipating these listings and early indicators suggest substantial listing gains. Out of the 5 companies that made their debut today, Mamta Machinery and Transrail Lighting witnessed bumper listing gains of 147% and 135% respectively. All 5 companies witnessed a premium listing, with the least generated by Santan Textiles of 31%. These robust performances reflect strong investor confidence and highlight the growing enthusiasm for new market entrants in India. Now moving on to another significant event today. UltraTech Cement's board has approved acquiring a 8.69% stake in Star Cement for a value not exceeding 851 crore rupees. This deal is significant as UltraTech looks to cement its leadership in the industry amid growing threats from Adani's group, Ambuja and ACC Cements. Following this announcement, shares of Star Cement witnessed a surge of up to 8%, and in the past 1 month alone, it has delivered an impressive 33%. Now, to give you an overview, Star Cement is the largest cement manufacturer in Northeast India with a current production capacity of 7.7 million tons per annum. Its facilities include an integrated plant in Meghalaya and 4 grinding units. The company aims to scale up its production capacity to 25 million tons per annum by 2030. Now, what would be the impact? The reason for UltraTech's acquisition of an 8.69% stake in Star Cement is to further strengthen its position as the largest cement producer in India. This will also solidify UltraTech's access to Star Cement's strong presence in the northeastern India market. The impact for Star Cement is likely to be positive, as UltraTech is well established and reputable company with a strong record in the cement industry. This investment could lead to enhancing Star Cement's operational capabilities and access to new resources and expertise. Now, before we conclude, let's give you an overview of the cement sector. The Indian cement sector is witnessing significant consolidation trends as major players seek to enhance their market share through strategic acquisitions, largely by Adani and UltraTech. And this consolidation period has led to the top 5 players amassing a massive market share of 62% in fiscal year 24 from just 45% in fiscal year 15. The top 5 cement companies include UltraTech, ACC, Ambuja, Shree Cement and Dalmia Bharat. Now, looking ahead, the cement sector is poised for growth driven by infrastructure development initiatives and increased housing demand across India. According to CRISIL, India's infrastructure and investment could reach 15 trillion rupees by March 2026, driven by the massive push for infrastructure development. With all these at play, cement producers are likely to benefit from enhanced demand dynamics. Now, in conclusion, whether it's reflecting on Manmohan Singh's transformative policies or observing the vibrant activity in today's IPO and cement sector consolidation, it's clear that India is navigating through some exciting times marked by growth and opportunity. Now, having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.